There we go. I'm off mute. Thank you.
There you go.
Let me close some of this down here real quick. I don't want people talking at me. All right. Thanks. I'm glad to hear that what Scott said is we got a lot of new people kicking the tires, so I'm happy to hear that. Welcome to the Trade of the Week, February 14th. Happy Valentine's Day. And let's get started. And by the way, I'm Steve Gomez, user number 3 in Trade Ideas, and Riding Shotgun is Andy, number 40 user in the Trade Ideas. Hey, Andy.
Hey, Scott. Hey, Steve. How you doing?
Yeah, we go way back. We've known the CEO of this company since '98, so not a better group to try and give you some concepts of the technology here today. So Trade Ideas, we are a publisher. We are not brokers. We are not registered advisors. We're not RIAs. We haven't taken any serious tests. So we're not in a position to be giving out any advice, and that's not what this should be construed as. We're just a software service company with a really cool platform here for technology, for trading and investing, and that's that. We are not financial advisors. All right, you're not alone with Trade Ideas. We always try to spend a little time on this slide to remind you of the onboarding and the hand-holding and the customer support that we have. We recognize this can be an intense program and requires a little bit of getting up to speed. So whether you're in the live trading room every day with Barry during market hours, or whether you're in the office hours yesterday with myself and Jamie doing a webinar, and then this evening's 2 Trade of the Week webinar, and we usually have one on Wednesdays and Thursdays. However, this week we don't. But nonetheless, this in conjunction with the one-on-one, if anybody out there has had the one-on-one, you probably realize how beneficial it was. But if you subscribe to Trade Ideas, we give you a 1-hour complimentary personalized one-on-one desktop sharing session with you to really get you going in the right direction. We realize everybody's looking for different things from the software, and so the one-on-one session is a great way to get started. If you're thinking about kicking the tires, Scott's going to give a great promo code at the end of the session here, and that would include just one month would include a free session with us to help really get you going, and it's just the two of us with who you sign up with here, and it's a great way to just get going on a personal level. So subscriber growth, this needs to be subscriber growth does. It's moving and it's pulling back, and hang on a second. Yeah. Hang on a second, guys. Okay. It's back and it's going there. We're actually now higher up here in this blue area. And Trade Ideas technology is continuing to grow. We need to update this slide. So, all right. Market recap is on the agenda. AI recap is on the agenda, and we'll talk about the Trade of the Week and even the one that was stopped out last week. We will try and get some broken down ideas. I'm going to show you something on how to maybe look for entry ideas or where to set some price alerts on your trend change lubricant, which is one of the main windows I use and talk a lot about, and where a lot of our Trade of the Weeks are derived from. So we're going to spend a little time with some trading stuff on that. And then for those of you that don't realize, we had open house last week. Back to basics in Trade Ideas. We're just putting this in there because we realize we've got a lot of new users in here that may have some questions. So we are going to open up to some questions at the end of the session. So sit on those questions for now if you have some. But basic, how do I, can your software do this or that? Some simple type stuff, and we'll downshift into that and finish with that. So that being said, let's save that for a little bit later, and let's go into the market recap. All right, starting off with SPY as we usually do. Yeah, we are in our uncharted territories up here. And I often say, and Andy often says, look left to see what we got coming. We got nothing coming at us, guys. We are on new all-time highs breaking out in the SPY. And I'm going to, in the next session, I'll break down the intraday a little bit, but today just another wonderful push higher. I think the market was ready for a pullback this morning, but perhaps some of the Fed speak, some of the Humphrey Hawkins testimony in the Congress may have given the market what it wanted to hear. So, hey, again, we broke out from these levels. We tested these levels a few times, but we are moving higher, and the train is leaving the station in the SPY and in the Qs as well. Drew that line as a resistance line. And lastly, in the diamonds, the Dow proxy ETF for the diamonds, all very much looking similar. Kind of a breakout, a pullback into the range, and then shooting off to new highs. However, we have one that's not participating, and I put a comma in there, IWM. Well, we talked a little bit about this yesterday in the webinar. Take a look at what new highs did to the IWM. So for those that don't know, this is the Russell 2000. It's an ETF based on small cap index, and so it basically tracks a lot of the smaller cap stuff. Well, what we've had the last few days here is nothing more than really a big cap rally, and in individual names or in the IWM ETF, you can see that here. But we did kind of close interestingly. And what happened yesterday was also very interesting. We popped above. We were at all-time highs in the IWM for just a brief moment. So let me get that back. For just a brief moment. But then came right back into the range. So a lot of supply sitting there still on some of these small caps. But today, charging right back, and we pretty much closed right here at this particular horizontal level. I think, guys, keep your eye on the IWM. The market likes to rotate. They like to rotate from one sector to another, or one pool of stocks of types to another. It could be that if the market gets a pullback, which it kind of tried to do on the open today but failed, the IWM could, stay relatively firm. I think there could be some rotation into the small caps is what I'm trying to say. So keep an eye on this level here in the IWM today, basically yesterday's high of 139.20 or so. And that's really what I'm seeing. Two things, again, to rehash. The smaller caps are not moving in conjunction with the bigger caps. And the bigger caps, they have nothing to look at on the left-hand side. We've got no resistance coming up. We're really in uncharted territories, unique times to be trading and to be a part of stocks when they're at all-time highs. But at some point, the market's going to want to take a breath. I almost thought it was ready to take a breath today. Let's just go ahead and look at that real quick. Here's a 15-minute version of the SPY. And coming off some weakness yesterday, it looked like the first candle of the day was going to kind of dip down. And then we got to our 10 o'clock data. We had a real wild thrust down and then a complete reversal of that candle up. So looking at these first 7 candles of today, and if you compare them to the way they've been the last few days, what we see here is a giant wide range, back and forth, down, back up, down and back up, and then back down, and then down, and then back up, and then down and back up. I mean, this was a very, very noisy first hour and a half for today's market. And that's the segue, the lead-in that I've got for the AI today. Let me put this on risk off. Risk off, for those that don't know, is basically the tracking of the stock performance, the net change performance of the AI using the exit that Holly, the AI, takes, which is our first column right here. So if I unhighlight that, here's our first column, risk off. These are all the exits that Holly made today. And the reason I start off by showing you guys this is I got to remind you that the AI is a statistically probable tool that's searching for ideas in real time that are statistically probable. And what we had on the open here was an extremely noisy market. A lot of noise, and I think that really disrupted the risk-on performance in the first 45 minutes to 2 hours of some of these trades, because those of you who were at open house with us last week pretty much saw every single day, Monday through Friday, even coming in was a win streak. But this is the first day that the risk-off has posted a negative number in the AI. So, that's okay. It's not perfect. A 70% win percentage still means a 30% chance you're going to throw in a clunker. But it's interesting to note, if we switch to risk on, which is what most of these trades are now here showing you in the column of the closed, risk on, closed trades, we had kind of an anomaly, kind of a turnaround. So the AI was really, really trying hard to, continue to manage risk in a very noisy and volatile environment in the first hour and a half that we had. But then I think as I said, the Humphrey Hawkins speech and the Fed talking to Congress, I think they were hearing some things they wanted to hear. The market kind of resolved itself pretty quickly, and then once we broke out to new highs here right at midday, that's when risk on really started to perform. Risk on put up $2.33 today, which essentially means the trades that the AI is calling out, they're good for all day long. Some of them may get stopped out early, but it's important to keep an eye on them. Let's take a look at an example here of SHOP. I love the strategy bouncers. Some of you guys have heard me talk about how I love the strategy bouncers. And I only fired one trade today, unfortunately, and it was a 25-cent stop out. It got caught up in that nastiness early on. It came out at basically 11 o'clock Eastern. Only to see that trade here is the blue arrow. Basically, let me zoom in a little bit. Here is the blue arrow basically signaling this green bar right here was the entry point. But what's unique about this particular one was it didn't take out yesterday's lows, and pretty much all the bouncers I've seen always seem to take out yesterday's lows and then bounce back through and then signal an alert. But it's interesting to note that Holly signaled the alert without taking out yesterday's lows. Look what happened at the very next candle. The powers that be, the algorithms that run our markets and make our markets decided, well, it's probably best to just run that stop right there and just see if there's anything underneath there. And unfortunately, that was actually the stop out for Holly. And if you had kept this on the radar, which I like to do, especially with the bouncers, you would have seen it was just kind of going sideways, waiting for a reason, just looking for a reason to break out of this tight range. Or, it just basically showed you it never really dipped down except for that one candle. So, the point is there are trades that might be prematurely stopped out in a noisy market. The AI works best in a clean market that's not full of noise. The statistics and the probabilities show themselves a lot better in clean types of markets, not markets that start and open up and just jam down and then jam back up and then jam back down with very, very wide. I mean, these are 3-time wide candles compared to what we saw yesterday. So what I'm trying to do is tie together here a very noisy market environment in the first 2 hours of the day, and it's probably very similar as to why Holly put her first in 10 days. I think this is the 10th day in a row. This would have been the 10th day in a row had the risk-on profit shown green. So 1 out of 10 days red, the other one's green. Those of you who were in the open house last week certainly saw that as an example as well. So anything you want to add? Anything sticks out to you here, Andy? I've been rambling away.
Well, let's see. Going back to the spiders, you mentioned the train leaving the station. Actually, I think the train may be halfway across the country now because it is getting rather extended. I think, and I can always tell by like family members and friends that know I've been in the business for a long time. They're always like, "Hey, what should I buy? What should I buy?" They just get
great example.
Euphoric, yeah, and
the contrary indicator.
Yeah, and I mentioned this. Yeah, I mentioned to Steve the other day. I said, what, I'm starting to feel like we're in that euphoric, possibly in that euphoric stage where is this move justified? Boy, I don't know. All I do know is it is going higher, and but I would say at these levels, especially if you're buying positions to position trade / swing trade, you might want to be more patient. A lot of times this is an area where I'll try to pick laggers, the stocks that really haven't, because that's what you'll find a lot of people doing. They'll start going after the junk stocks, we call them sometimes, and they could be, you can have some nice moves in them. But
you actually just kind of, I'll finish your thought. I'm sorry. Go ahead.
No problem. No, well, I was just going to say, because you take a look at the Qs and the I mean, gosh, it's been a huge move, and it just go back to the election, and it's some of the moves we've seen in the Qs and the spiders and the Dow. Just wow, it's just been incredible.
The point I was going to make was like 2 steps down the chessboard that Andy just mentioned. A lot of times when markets get tired, the junk stocks start rallying. The old solar stocks, the old shipping stocks, whatever you want to call it, but that could be an interesting case if the buyers do come back and start picking up some deals here in the small cap IWM Russell 2000. That could be maybe the eighth inning of like what you're talking about there as the mood starts to shift back towards the small caps. But what Andy's saying is really true. I had my brother once told me, he was buying as much silver as possible. I didn't tell him that I was selling all my silver coins because it had just gone parabolic. And so that really, in a nutshell, when your family members start hearing about this, they're usually the last to know. And it's always been kind of a funny contrary indicator that we laugh at ourselves, in the past, because they're not watching the markets every day. They're just kind of hearing what's going on. And we always get a kick out of that. Anything you wanted to add for what Holly did today?
No, I totally agree with you. I thought that was a good analysis of how this morning was a very difficult trading, and that's when she got in the hole. And I was really impressed by the way she fought out of it and finished the day on the risk-on column. A couple of good Zoma I thought was a really good trade. I think you can see once it poked through on the daily, that level down there, put it on that red bar going back of the high of January.
That one?
No, in January, the high there. There you go. Yeah, once it got above that, there wasn't really any, and you can see it. It made it all the way up there to the next support line. It's kind of what we always talk about. These patterns, these chart patterns, have a tendency to fulfill their destiny, and there's an example of one that Holly picked out. Plus, on top of that, it was what I call a very significant hold number, the 5 level.
Yeah.
Once stocks get above 5, you can have other funds, some big money can start coming in. So big move there, and I thought that was a really good trade around. It was not even a trade around. That's one you could have held all day. Really, the 15-minute chart never really broke down. I mean, it just.
That one put up 15% by the end of the day.
Yeah, nice trade.
Okay. All right. So. Yeah, the one thing I want to say before I leave is you're never going to see the AI take a big loss. And that's one of the first and most foremost rules that a new trader can learn and learn quickly. And Dan, the CEO, likes to remind us that, using Holly as a tool is like sitting next to an unemotional trader who's just going to keep banging away as long as the statistics are there. But what you're not going to see that the AI do is take a big giant loss and go, well, maybe I'll just see if it goes another couple levels. And no, we'll talk a little bit about that in the trade of the week from last week, ARTX. That's very good lesson in risk management. So that's all there is on AI. Let me go and let me bring up this week's trade of the week, and we'll talk about it and what we're looking for. Once again, it was located and found off of this trend change lubricant factor. This is a tool that essentially looks for stocks that are beaten up but are finally basing and maybe trying to put in a rally off the bottom, off of a rounded bottom. This was a very sharp bottom in this particular case. But once again, the Weight Watchers, WTW, is the trade of the week. And we cautioned people because we want to make sure that you're aware earnings date here is coming up in 7.5 trading days. So I think it's around the 23rd or 24th of February. We really would like to get this Weight Watchers above this green line that I've basically got triggered there. That's our trade of the week trigger. And one of the reasons we really like this, typically we like the short float squeeze potential going into earnings. There could be a contingency of people to want to get out of their shorts before earnings for whatever reason. Well, we're showing an 80% short the float. This is an absolutely huge setup for a possible short squeeze. And once again, that's one of the reasons we selected it. In the past, some of the short squeeze alerts that we selected as a trade of the week would be something like CWEI, and that thing is just still going. So this was the actual trade, or I was actually back down here and put an orange line in there because that's where the actual trade of the week was for CWEI. But this is the idea, and this is the strategy that we're trying to go with, looking for things that are not going to just run for a day or two, but may have a few days worth of run in it, and ideally maybe a few months of run in certain cases. It depends on what the earnings are going to say with Weight Watchers coming up. So what are we looking for here? Well, what do we like and what do we don't like? Let's start with what we don't like. What I don't like is the way the price action went through yesterday, triggered, and then came back and settled as a wick. Same with today's action, a little bit more condensed. Went through yesterday's highs or went through the trigger price and then pulled back again as a wick. I'd rather not see that. I'd rather love to see follow through. I'd love to see green candles closing on highs, but we didn't get it. But if you'll notice, this stock seems to have a personality that does that a lot. It leaves a little bit on the end of the table of the wick here. So we still have 7 or 8 days of trading to try and get this thing to pop above, the recent high here of 12.97. Our entry price is 12.82. but we'd like to get this thing moving, and what it's going to take is basically just some sort of tinder to light the fire to get the shorts to start capitulating. And if we can get the price above there, we could have a nice couple days of movement, which ideally in a perfect world would allow people to maybe fade out of a third or a quarter. And if you wanted to, if we got a nice move out of it, maybe you take it into earnings if you've got some. It's up to you, but taking things into earnings, as we know, can be a real gamble. And in my experience, it's always seemed to have been the opposite of what I wanted going into earnings. So it's not one of my favorite things to do. What I do like about it is that these wicks are holding up. Let me go back to the 15-minute chart. In the 15-minute chart, basically we've got a level that we can see is really holding here in the interim. And tried to test it today, but I'll just go ahead and mark it up right there for the most part. This 1270 level held early morning yesterday, held at the close yesterday, held on the open today. Went through it to try and see if there was any additional selling that would bring in additional sellers, and there wasn't. This is basically right here. We're looking at, guys, this is the bouncer alert right here. If this was a daily chart, this would be our bouncers alert pretty much, taking out lows and then bouncing back up into the range. So that's what I do like on a 15-minute chart. It seems to be holding 1270 very well. But I believe the stop's been placed down under this congestion here. I don't have the exact number with me, but for the most part, this congestion down here, we want to just allow the price to breathe, and I believe that it's somewhere down here. I don't know the exact number, but that's basically what we're looking at here, guys. So going forward, we really want to see. Go back to the daily chart. Really want to see a follow through our entry price and not closing on a wick. I'd love to see the stock closing on highs. If we see the stock closing on highs, then chances are we're going to have some good follow through the next day, I believe, because basically everybody that goes home at night and looks at their positions and see that they're short a stock that's technically starting to break out, we hope, along with 80% of the other people, we want to be one of the first people to hit the exit doors if we're short. So that's the thinking on that. And last week was ARTX. ARTX was a pullback type of entry. Rather than buying the breakout up here, stocks do tend to breathe, and this can be a difficult scenario if you're really looking for follow-through, and if you're stubborn and don't get out, you can have 5 or 6 days of down candles easily. And then basically the stock based right in here into this level, and it also was at the 50-day moving average as well. The 50-day moving average was on the scan that we used to find this one. Our first day was okay. We had a nice green candle. Second day was good. Actually, this was the first day, all the way up and then all the way back. So we got into the money a little bit, but the takeaway here on showing this trade is all about risk management. If this had failed, if this level had failed, we were really looking at a possibility of coming back down here into these levels, the 330 level, 320 level. Well, we got stopped out because we used our risk management. I believe the stop was 375, and we did our best to manage the risk, but there's nothing that would say that this price would have continued to come down here to the support. So you really got to stick with your plan, and that's what we try to do, is demonstrate, not all trade of the weeks are going to be winners. I'll tell you that right now. If you're expecting that, then I'm sorry to disappoint you. This is at the end of the year, we'll have a good trade reference, but this particular one did not bounce as we thought, so we have to put our risk management hat on. And this would have been a pretty good significant percentage loss if you'd have ridden it all the way down to this next level of support. So there was really no telling that it was going to bounce here in no man's land for the most part, but it did. And we just got to go onward and say, okay, manage our risk, and let's go to the next one.
That's what we call the deal double dipsy doodle got us, It went down one more time to shake out everybody who bought on that level there. See that? It came down and went up, and then I call it the double dipsy doodle. It just comes down.
But the entry is key, and giving ourselves a big pullback entry at support. Yeah. Think of these people up here, like I was saying earlier, you will not see the AI take big losses, and you will not see us advocate holding on for big losses. But somebody could have easily bought this green candle and still be holding on, trying to get back to even. But we felt that it was a very good pullback entry, and then the risk management was very tight. And so that's the example of risk management, guys. You got to just stick to your plan. And technically speaking, it just wasn't looking like it wanted to bounce where we wanted it to bounce, unfortunately. All right, can you pop a link to the trend? Yeah, I'll do that right now because we talked about it.
I actually put it.
Did you?
I put it in there, Steve. Yeah.
Thanks. So let's move on because I got a little other something here to talk about. Okay, so I saw this on Twitter the other day, and it's essentially the accumulation, breakout, and markup. Stocks will go through phases of euphoria, like Andy was mentioning a bit ago, froth and euphoria, where it's like, honey, put the down payment on the lake house. It's never going to get any worse than this. This is great. And that's full of euphoria. Then the stock starts to break, or the market in general, speaking, and then you have kind of denial, and then capitulation, and then we start to base again, and this is the cycle of a stock as it's basing in the accumulation phase, and then moving back higher back into the markup and reaccumulation or accumulation phase again. Well, some of you that know this alert scan top list that we're using here, the trend change, that's exactly what it's looking for. It's looking for stocks that have been beat up, putting in a base, like that CWEI I showed you guys earlier, and then breaking out. And it certainly doesn't hurt to have a little bit of short component in there as well. But there's a couple of ideas on here for people, and I'm after I explain this, I'm going to maybe show you a couple of ideas directly from that scan as to how we could mark up some of these entry concepts, different ways to think about an entry here. I think Twitter, starting with Spring down here, what you're seeing is basically kind of like the bouncers. Here is our support floor, and a third time trying to go through is denied quickly. There was no follow-through, no more shorts, selling exhaustion. The buyers stepped in right here. Well, anytime you see a stock basing like this and then it throws down one little bad day or two bad day and then reverses right back up, that can be the beginning of a nice trend change. So for very, very, very aggressive traders who like to do the very unconventional, and Andy used to do this kind of stuff and still does all the time, is find stocks that don't look exactly that great, but knowing that once they bounce back into this range here, that was probably the worst of it. And then more of a moderate, less risky type entry would be to wait for, of course, the breakout on a basing type pattern. And then, of course, we see the people that feel like they missed the breakout. And the worst thing you want to do is buy late 3 bars down the road after a nice breakout, because inevitably, as I've said so many times, even when I show you guys on the indexes, when we look at the spiders and Qs, the price will pull back and retest that breakout. And that prior resistance can become future support. So these, I think, can be the most interesting alerts to set. And when we talk about setting price alerts, we'll use some price alerts on the Trade Ideas platform here. We right-click in the chart and allow the pullback to trigger the former breakout price. So I want to try and find a couple of examples of not only the breakout, but also the second option, or the second chance entry, the throwback, as they're calling it here, as I would call it, the retest. You want to add anything to this
No, I think it's just pretty self-explanatory, and I think you're explaining it very well. So I'll probably have more say to when you start pulling up charts. But
all right, well, let's take a look at a few. I've got a few that I've written down that I pulled throughout the day from this particular scan, the trend change lubricant, and just because I just want to show some of you how we're getting this type of scan. How do we get the bigger picture of a 52 weeks filter? We're using a 52-week filter in here to get what we're trying to get, which is the stocks that are broken down and are basing and maybe hopefully ready for an accumulation stage. So just real quick, first off, everything in this window has to be up on the day, at least 5.5% or greater. The price can be anywhere from 1 to 1,000. The average daily volume is pretty light at 100,000, but on days when things are in motion, it's usually more than that. But here's where the magic really happens, this position and year range. So this is an actual 52-week filter, where if you figure 0 would have equaled the price at the 52-week low, and 100 equals the price at 52-week high, we are suppressing most of the stocks out there, and we're saying only show us the ones that are no more, we're on the maximum column here, than 35% above the 52-week low. So this first layer of position and range gives us the really ugly stocks that have gone through the cycle of euphoria and denial and despair and capitulation and are now basing and then maybe trying to start some accumulation phase again. So that's the first layer. The second layer is this position in 20-day range. I'll use anything from 85 or maybe even 90 to try and get even closer. But a position in 20-day range is essentially saying, show me all the stocks. Well, let me back up. A position in 20-day range Your 0 equals the 20-day low, and 100 equals the 20-day high, the trailing 20-day. So using the minimum 90% here, it's going to start to put stuff on the board and give us an alert that, hey, the stock is approaching a new 20-day high after getting its teeth kicked in for the year, being no more than 35% above its 52-week lows. So that's really the only two main filters that we have to make this thing work. So let's delve into a couple of ideas. ICPT. This was one today that triggered, but I want to use this as a possible pullback. You'll notice that orange line, for the most part, is where a lot of supply came back in and selling. But something happened, and I don't know what it is, and I don't care, but gap, and then a nice trade above. Well, actually, it traded above and then kind of closed below. But now it's taken back off again. Now, I think what you could do is you could probably come back and you could set some sort of a gray area type of pullback alert if this level becomes prior resistance, becomes current support again. It's entirely possible. And the way it looks today, maybe not, but after maybe a doji star tomorrow and maybe a couple of down days, maybe next week we have a downdraft and come back and we test this level right here at 117.42. So I would just mark that level using our right-click price alerts, and I would give myself notes, pullback, pullback, and then watch the price action on these pullbacks. They aren't gospel. When they come back and tickle and trigger the price action on a pullback, make sure you keep it on your radar and watch where the bidders step in and start watching the 15-minute chart and start seeing where or not levels might start showing up. Sometimes they'll overshoot those prices like they did right here, and then they'll recover, and then they'll kind of hold for a little bit and then start to move off that level. That would be ideal. So there's the first example of a possible using a pullback, like we talked about on this chart, after it broke out of its basing range, the throwback. That's always a possibility here for this ICPT. So keep that in mind. Let's look at another couple ideas. SDG, SEDG. Okay. Let's zoom out and see what we got here. Once again, it looks like this one just broke out today. And so, I would consider probably anything above here could be a chase. Simply using that orange line once again, trying to find the level from which it broke out, using many points looking left, there and there. It's touching there, wick, close to the wick through, close to, so this is a level that, I'm trying to open people's eyes to see when you're looking at these charts. Where are the levels of interest? Well, here's our declining, stock and coming through its phase, its late phase, and it looks like it's trying to base here. A lot of attempts at going to new lows, and now we're moving up. So we've got to find that level that we want to identify. Now, since we missed it today, we can right-click and mark it up again as a pullback alert and watch the price action to see if it wants to dig in at that level, and then you're getting a second chance. All right, so there's that. ACHC, let's see what I saw on this one. Okay, this one looks like it's getting ready to break out. So basically, I think we still may have some time on this one. What you got is kind of a inverted head and shoulders down here with a little double bottom head and right shoulder and left shoulder, kind of shrugging. But if we look back here, this recent high within 20 days is very close to being taken out, and it's very close over here to these other wicks. This could be a wonderful opportunity for a breakout, and I think I've already set that alert. I have a CHC. You guys can see that red line right there is active. Okay, so that would be an opportunity for the breakout. Let me bring this back again. So we're talking about this level right here. If we get above this level and you guys feel like you missed it, the last thing you want to do is chase, because more often than not, the stock's going to breathe and pull back to the throwback level. So that's what we're trying to identify here, using our price alerts and getting some of these off of the trend change. And then Taro, I think I really like Taro. Whoop, I got to type in the window. Type. Okay, Taro, similar thing. Didn't we just do Taro? That looks like SDEGG.
No, we haven't.
Oh, yeah, they're very similar. Okay,
yeah,
so same concept here. I've identified the breakout for you. It was kind of support even back here on these ones, and then became resistance right there. I'm going to blow through that as an anomaly. That's okay because we've got some nice congestion down here. So for the most part, with thumbnailing it or eyeballing it, that's probably the level that could be of interest for a pullback on Taro. Oops, call that pullback entry. let's see, Juno. This is one Andy was talking about a little while ago. And I think there might be something on here as well. Yeah, I like this one. This one's much more defined. Okay, so basically there's the range that we broke out of for the most part. Let's see. Actually, we could probably move this one. This is old. Let's grab the crosshairs. Yep, looks like we might have missed it today. But look at that. Went through, came back, but it's not breaking below this level here. This is a very important level, it looks like. We've only got 50 cents between there and today's close. This one, maybe some follow through on this one tomorrow. If we go and look at our single stock window, there's 23% short the float. And again, earnings are still 9 days away on this one. So there could be some more upside on this one. Doing a pullback alert here might not do a good service. There's a lot of congestion. So I'm going to go ahead and mark this one back up as a breakout right above. I think that's probably what my initial intent was anyway.
Mm-hmm.
Was a really nice breakout. I'll just go ahead and do price alert. I'm going to call this one breakout. Definitely a pivot point right there on the gap down, second day highs, and then it's been down ever since. So this level right here, the shorts probably don't want to lose it, and it could be very much similar to some of the other stuff that's basing and trying to turn back up. See if we get a move out of that. And then, I don't know, VRX, I don't know. I mean, it might take a while, but the only significant level for me that looks interesting in VRX is still a ways away, up here at 16 or 1870. We closed around 16 today. But from where this stock has come, hey, you never know. Look left, mm-hmm. Everybody. Look at how that lines up. Okay, interesting. This is the anatomy of a pivot level. Prior support becomes current resistance. And we only have 11% short on that thing now. They've been all weeded out. But still, this could be another example of the breakout opportunity for VRX. I'm just going to leave that one open. And GES, what did I have to say about this one? Same thing. Very, very defined line. Gap down, traded back up, got slammed pretty much where the gap started and never got back to that point. But we're basing, new higher low, higher low, higher low. So this level right here is probably going to be a good one for another breakout, not a pullback. So I would call that 1403. I could just set a price alert at 1403 and call it breakout. So hopefully people are getting a little bit out of this because, the trend change lubricant is not going to just pop up and say, hey, buy this, new high, buy that. It's a bit more subtle. It's a running list of ideas sorted by short percent. So the ones up here at the top have the biggest potential for short float squeezes. So I'm usually paying attention really to the top 5 or 6 only. Down here at 15% and 10% doesn't really interest me as much unless it's a really nice looking chart. But the idea of doing what I just did was to try and show you guys the second step. First identify where the pivot levels are and then how you might want to play it. And then use the price alert and then forget about it. It might be 5 or 6 days before it pops back up, but if you make good notes, you know what you were thinking when you set those alerts. All right.
Hey, it's a really good. I love that you're doing this because more people, I guarantee you, would benefit by using alerts for pullbacks. It's a tough game to play because you're going, it's counterintuitive. People like to buy stocks when they're moving up and short stocks when they're moving down, but if you can get in the habit, one of our best trade of the weeks that we did was on Facebook. Was a pullback, right there when it filled the gap on Facebook, and see that big long. It's hard to jump in front of that, but if you get in the habit of doing it and just playing small size, you don't want to go full in on when you're going against counterintuitive like that against the grain. But at the same time, it's amazing. Most of the best traders that I know, they will apply some sort of buying stocks on pullback strategies. And even when you're going through and just looking at even if you're not looking at alerts and you're just going to look at stocks, if you see areas that you think you might want to buy a stock, put an alert in there, and then
doesn't mean you have to buy it.
No, you can reevaluate when it gets down. They'll go off and shock you.
Yeah. Wow. I forgot about this one. Look at that. Yeah, I did fill it now. Maybe I should watch this one here and see if the bidders step in. And on that Facebook example that Andy just gave you, there was really only about 3 hours of pain. That little wick right there. The yellow line triggered and went below the yellow line. Like I said, sometimes you might overshoot a little bit. but it was such little pain to sit through for such good gains beyond that. And that's what we were trying to do with ARTX by buying this initial pullback here at this this first spot. That this was the day it should have moved, and the wick closing back down, kind of an ominous sign. And then the red candle the next day, became basically a risk management type of a scenario. So, again, we're just trying to get you to think about different opportunities. Again, this one down here is very unorthodox. Twitter actually did this last year. Twitter went to lows like to the fourth time, and then it was a big wick, and it closed right back up, and then off that it bounced up for like 2 or 3 weeks. But that is a very aggressive and contrarian and not really, what's the word I'm looking for, typical type of trade. But they can work. They can work. And then, of course, the breakout and the throwback. So, all right, enough of that. What we want to do for the next 10 minutes or so is just open up to a few questions. I'll start yammering here, but if you guys are sitting on a question of can we do this, or how do I do that, or how can you configure for this, I'm just going to show some of the newer people. If we want to create a new window, it's basically as easy as a new alert, and what we get is a configuration window. And the most important tab on all these tabs here is the search bar, the search tab, because as you can see, we've got a lot of opportunities in different events, different algorithms, different filters. It can become a bit overwhelming. So if you just start typing in keywords like gap, okay, well, Trade Ideas looks like they've got 2 strategies for gap down reversal and this false gap up retracement. This is one that I submitted way back in the early days. Stocks that gap up and come back in and then rush to new highs. Matter of fact, I can probably give you a great example of one today. Where is it? ZG. Here's a great example of the horseshoe alert. Basically, stock gaps up, comes in, can't close the gap, and goes to new highs. You're alerted right there. And so there was a nice 50-cent winner pretty quickly on that. We have the same thing for the downside. So, going back to how do I, the most important window you can spend time on is the configuration window and using the search. And then if you find that you don't know what a standard deviation breakout is, well, just simply highlight it and click the help button. Help button is going to bring you to the documentation page, and right at the top is exactly the definition that we're looking for, what a standard deviation is and how Trade Ideas might utilize it. So, I always tell people to spend as much time as you can. Some people like to play around with MACD. Trade Ideas can scan for intraday candle patterns. So, for instance, if I typed in hammer, this one can be an interesting one, the 60-minute hammer candle. So a lot of times the 60-minute candle is very slow, and a nice hammer can show up on oversold conditions, and there can be some decent strategies to be derived from the 60-minute hammer. Now, what we don't have is the ability to scan for daily candle setups. I happen to have one that I use that I call the washout bounce, and it actually does scan for hammers. And today we got kind of an interesting one. We had 2 come in, matter of fact. SQ, I don't like. Why don't I like it? I don't like it because it didn't close on highs today, and I don't like it because it had a giant wick the other day and seems to just throw wicks back and forth. So this is what you would call the personality of a stock, kind of like I was showing in Weight Watchers earlier. Personality of this stock seems to throw elbows and leave a lot of wicks. So I'm not interested in that one. But one that was interesting, where'd it go, was the other one. Where'd it go? There it is. This one, LWNTA. Now, there's 2 things going on here that you need to pay attention to. The first is the washout. Look at what happened. All this happened in one 15-minute candle. Now, humans don't trade like this. This is how machines trade, and this is all the fingerprints of washing out somebody's or many people's stop-loss orders and then buying them back very quickly and taking the weak hands out of this trade. That has to happen. That's the whole idea behind this, that we're using other people's misfortune of being stopped out. Just pretend that you were this guy here and you bought the second green candle. You got a little bit of movement, and then we fell down yesterday, and then today you're like, oh boy, I got to put my stop in here. Here's the base. Okay, I better put my stop below the orange line. Boom, they got you. Not only did they get you, but they tipped their hand that it was them. They did it in the first 15-minute candle. Okay, humans don't trade like this. This is all algorithms, and it's predatory stop hunting is what it is, but we got to live with it. So we're trying to use this particular alert to scan for candles that are going to show where everybody got washed out in the morning, and then if the price comes back and closes like nothing happened right up here in this intraday chart, look at that. I got a little red line going right across there for tomorrow. keep an eye on that. The last thing I like is this stock is in basically an uptrend. So that washout hopefully will continue the trend moving higher. It's my philosophy that these things are basically mitigating a lot of the volatility when you see them. So the next 3 or 4 days might be not so hopefully volatile. All right, let's see if we got a couple questions. The trend change lubricant window in existing, oh, that's an old question, I'm sorry. Would relative strength / relative provide some of the strong stocks at a specific point of time? Relative strength. Well, we don't actually have any tools to measure relative strength. What we do have something to measure is relative volume, and I actually have it on the trend change scan. If I wanted to sort by it, I could. But relative strength, I think you're talking a lot about, what one stock's doing compared to the other sectors, and we can't take it that far. But back to relative volume, essentially, what it means is it's relative to this time of day. So if I stop right here at this guy, INO finished its day at 1.0. This guy did exactly what he was supposed to do for volume. These guys below finished the day below what their average volume would be by the end of the day. So during the day, let's say stock XYZ normally trades 300,000 shares at noon on East Coast, but today stock XYZ is trading 600,000 shares at noon. Well, that would be a relative volume value of 2, roughly. So relative volume is checking throughout the day to see how the current volume compares to what the normal run rate of the volume is for this time of day. So that's the takeout. When you hear the word relative, what's it relative to? It's relative to what it normally does this time of day. And that's what's so cool about Trade Ideas is that we've got a database going back 3 months on over 8,000 stocks in the U.S. that can catalog all these things and create these data points. 5-minute high to low, 5-minute volume, 60-minute volatility, average true range, whatever you want to do, we can quantify it. And then it tells us, coming back, when the baselines are being exploited as an anomaly and something is jumping off the page. So that's what allows us to trigger, and that's what allows us to capture relative volume and compare it to what it normally does for this time of day.
Now, Joe, what you can do, because we have what's called change from the close, and that's how you can use your column. You can use your sorting function. All of our you can sort by any column up there. So if Steve went over to change from close, you would find the ones which ones are relatively strong versus, and you can do this in any top list,
That's why I bring Andy on.
Yeah, so if you can, if you punch it one more time, Steve, so it'll bring up that the most. So there you go. So you can see the ones that are up. That one up 37%, one up 6%. There you go, 12%. So you can use our column function, sorting function, to find those ones that are relatively strong.
Yeah, that's a good workaround. Can we share the washout bounce? Sure, of course it's shareable. But again, I've got to remind you, there's 2 things you got to look for. You've got to have the washout occur on the opening candle or the first 2 candles. That's the HFT fingerprint, and they're like basically just robbing people of shares. And the second thing is, it's got to close at highs, because if we buy this sucker, midway through the day and then it falls back down, well, now you got to decide, do I want to take home a big doji candle? No. So the takeaway is, first candle's got to be the most aggressive one, the first 15-minute candle, that's where it all happens. The second one is the stock closing at or near highs or where it went out yesterday. So almost like no harm, no foul, except for these people that got stopped out down here. All right, so let me share that with you. I'll drop it in the question box that Keith's asking about, and I'll broadcast this to everybody. So essentially, you should be able to pick up the cloud link here off of that question. All right, send to all. There you go. Anybody that wants that one. And essentially, if you're familiar or not familiar with how to receive a link, all you got to do is right-click and save the copied link to your clipboard, and then come over to your Trade Ideas, load from cloud, and it'll be right there waiting for you. And you can load it just by clicking load. So that's all you guys got to do on your end. All right. Would this also help out pre-market? Joe's question. I don't know.
Yeah, well, Joe, our pre-market channel has the gappers. The ones up it shows the gappers. The one up the most in pre-market and the ones down the most in pre-market. So all you have to do is go to our channel bar there on pre-market, and you can find the ones that are gapping up and gapping down.
Mm-hmm.
Yep.
All right, and then notice basically when I switch channels here, everything leaves. So if there's a window that you guys really liked and you wanted to save it, you could pull it out to the side before you go to the next one and click pinned, And you'll see as we go to the next channel, we've kept this window available here. So for people who really like to do channel surfing and go to the social media channel and see who is being talked about the most on StockTwits, that's what you'll find in the social media channel. But you can use the pin feature to keep moving from channel to channel. And then when you're done, you could just turn that pin off.
Yeah, make sure you do that. Otherwise, yeah.
Because if you don't, then you start to duplicate things going back to your layout. And I just go back to File, Load Layout. I recommend just using the default layout because that's what Trade Ideas looks for every time it opens up. And why do I have duplicate charts now? That's a good question. Because they're pinned. See? Now, why the hell are my charts pinned? Anyway.
And you're teaching people how to pin.
Teaching people how to pin, and I'm not demonstrating pinning. Yeah.
Steve, I may have stepped on you earlier. You were going into Infinera, and I don't think you ever come back to that. So if you want to just touch on that real quick, one of the Trade of the Week for a couple of weeks ago that we had called out, and this is one where I'll let you talk about it.
Well, it had a nice breakout from its range, but for the people that were bold enough to hold it through earnings, it did get a nice pop through earnings, and ideally, by the end of the year, hopefully this thing will continue to move higher. Yeah, we were talking about some of the losers, and I just wanted to throw up here real quickly. Infinera, at this level, by the way, was up 38% at one point. So there's other stuff that's happening out there. Didn't want to be a bummer with the
and I wanted to throw this out because this is what I advise to friends and family, whatever, myself, is when you do get a move like that. So you got a big enough move from the entry where you may have had 50 cents in it, and this is where you could. When you do get a move like that, maybe you can sell half going into earnings. I'm not a big, proponent of holding stocks into earnings either. But if you're buying stock that's down like this, beaten up, and you do get a little movement, you can sell half or maybe even 3/4 and just hang on to a little bit and sell enough to where you protect. If, for example, your last 200 or 300, it does come out and it drops down $2, you're not going to be hurt, but you can still participate. In the upside.
Somebody's asking for the horseshoe alerts. They found some value in that as well, so I'm happy to share that real time. Here's what we're going to do. I'm going to show you a little trick here. We're going to end on this because this is cool. The horseshoe up and the horseshoe down are obviously the same alert, but one's bearish, one's bullish. Well, the way I made the horseshoe down was by using our flip feature. So let me just show you before I share them here. Duplicate the window that you're going to configure. And then we can turn this upside down for a bearish strategy and configure by using this really handy-dandy flip button right here. And that basically just inverted everything that needed to be inverted and nothing that did not need to be inverted. And then voila, we've got our flipped upside down horseshoe. So yeah, I'm happy to share these. I'm going to share both of these. And JJ, what I'm going to do, if anybody else that wants these, I'm going to drop these into the chat window rather than the question window. The chat window is on your main toolbar for GoToWebinar here that you got, and if you click the little plus sign, I don't know if you guys can see mine, but can you see that, Andy?
See what?
Oh, I guess not. Yeah. So it's invisible. On the toolbar, click open the chat window, and it looks like Andy dropped in something earlier. I'm going to drop in the first one is going to be horseshoe up, and then I'll also do horseshoe down, and then we'll turn it over to Scott to talk about some savings for you guys. 1 second, Scott. So there's the horseshoe up in the chat window. And let me grab the configuration for the horseshoe down in the configuration window. And that should be good to go. Now, if anybody's listening to this on replay, go ahead, feel free, info@trade-ideas. You could request a cloud link that you saw on the webinar, and somebody will drop that into your account or send it back to you either way. So somebody's asking about the recording. The recording, Mr. Gilman, is at our YouTube page. And the YouTube page, real simple, just go to YouTube and search Trade Ideas, and you'll find our Trade Ideas channel. And in that channel, in the upload section, all of our webinars basically get uploaded the same night. So should be easy to find for you. Again, if you have a problem, email us, info@trade-ideas, and we'll send you the link. All right. Thanks, everybody, for tuning in and listening. And let's bring in Scott.
Yeah, thanks, Steve. Thanks, Andy. Couple items. The first is we want everyone to be aware that we have a podcast now, and it comes out every Friday. usually about 2 hours after the close on Fridays, so it's there for you to listen to over the weekend, and you'll get it automatically if you're subscribed to the podcast and using your favorite podcast app. So the best way to find it in your app is just open iTunes, open your podcast app in your iPhone, or use whatever you use on your Android device or other devices like Stitcher, Overcast, iHeart, TuneIn. We're in most of the platforms. If you don't find us in the platform, let us know. You can just search for Trade Ideas Podcast. We should be the first result. And subscribe. We'll have a new episode up tomorrow afternoon. Actually, tomorrow's Thursday, on Friday afternoon, so in 2 days. And there's also some archived stuff there from the last few weeks to listen to. We launched it in December, so we've got about, including special episodes, about 8 or 10 episodes up now. So yeah, go ahead and do that. Search for Trade Ideas Podcast. You can hear from Dan and Jamie and Steve, whoever happens to be available. I think the last one was David Afariat, one of our managing partners, talking about some of the business side stuff. Very interesting one with Jamie. So go ahead and download that episode and give us a listen on Friday also when we get the new one out. So there is a special code this week for Valentine's Day because Holly loves you. And it's Love Holly, all caps, like you see on the screen. And that's a bigger discount than we normally give off these webinars. It expires tomorrow afternoon, though, so use it before the end of day tomorrow. And that gives 20% off of either premium or standard of your first installment. So your first month or year, 20% off. Big savings there, especially if you opt for annual. The difference between Trade Ideas Standard and Premium is access to Holly the AI is in Premium, as well as unlimited backtesting using the odds maker and our other advanced features like shareable price alerts and RBI GBI windows. However, both Standard and Premium include a full hour of one-on-one training with one of our educators. You could choose Steve, you could choose Andy, or Jamie. And as soon as you register for Trade Ideas and become a paying subscriber, just go to support and click on training, and there's an interface right there for you to pick the best time and date that's available. So go ahead and do that as soon as you subscribe. You can also find a handout in your handouts panel. Just go to your GoToWebinar interface and find the section that says handouts and click on the little plus to expand it and download that PDF. It's got this code on it and some other contact information that's useful. So if you have any questions, though, you can email us at info@trade-ideas.com. That is the best place to send your questions. You can also follow Steve Gomez on Twitter at TodayTrader. Dan Merkin is at Trade Ideas 1. Our regular Trade Ideas account is just Trade Ideas, and it's the same on some other platforms, including Instagram. And then Jamie Hodge, our another one of our educators, Director of Education, is at QuantBot. You can follow us on Facebook, like our page, facebook.com/TradeIdeasPro, because we post some original content to Facebook now and then you can share that out with your friends. You can use the 619 number during business hours on the West Coast if you have a question about your subscription or billing. But if you have a question related to using the platform or setup or anything else relating to the software, the best place is to send an email to info@trade-ideas.com that goes into our help desk software, and we route it to the best team member who is available to answer your questions. So that's the place to send items for the fastest reply. You can also reach out to Steve or Andy directly, steve@trade-ideas.com or andy@trade-ideas.com. Again, thanks everyone for attending. The recording will be up later tonight, and you get an email reminder about where to find it. So thanks all. Thanks, Steve. Thanks, Andy. Talk to you guys soon.
All right. Thank